Hey guys, Youth Fields here. Today we're going to be going over the weekly performance for the portfolio. So going into it, obviously the stock market was kind of similar to last week. It was a little bit up and down all over, like different sectors. You can see healthcare is doing very good this time around. There was a lot of increases on premiums and stuff that were announced. You can also see energy seemingly did very good. Stuff like financials as well as technology are a little bit of a mixed bag. Financial is more red, obviously, but overall, pretty mixed. SPY is up, I think, barely for the week. If we come over here, we can see 7-day performance on SPY was 0.17% up. But yeah. But going into that, actually, we have our portfolio, which is up 1.47 or 1.74, I'm sorry, percent, with a majority of that coming from M1 Finance, which is pretty cool. We had a bad week on Composer. So first of all, I did actually switch out my strategy for this one, which is basically a kind of a combination between this and another strategy using a different check. The problem I was running into with this, like obviously this is great performance. And let me go actually to this one. You can see it goes 74%, almost 75% annualized rate of return, aka CAGR, right? But the and the max drown is also low. But the problem that I had with this is the deviation. So I ran the tool IC stats, and I noticed that the deviation was very interesting. So what was happening, from what I can tell, is all of the signals that were happening were just super twitchy. And so I'd be in TLT, let's say on Monday, really when I need to be on VBF or something. And then the next day, I'd go into VBF. So I was always seemingly like a day behind, which was really annoying. And so a lot of deviation happened there, which I just, no matter what happens, I don't want to be in. Even if it did 10% last week, I don't want to be in that because it can't match the back test, which makes it effectively useless. This could go literally any direction, up and down. So I just don't want to do that. And so I went back in on Friday to the BF49, which was really good, right? Like, to be clear, I didn't get out of this because it was bad. In fact, it was super good, super stable, matched the backtest almost perfectly. The reason I got out of this was actually because of I wanted higher returns. So part of that's greed, but I still am trying to simplify the logic because the BF strategy here that I have is essentially 5 symphonies created into one with daily um, rebalancing, which isn't bad. The problem is that has an assumption on each of those different symphonies that those are performing well and now overfit. And the more I look at that, the more it looks overfit. And so I'm trying my hand at a few different strategies that are way simpler that of course will come with some drawdown, but that's actually not too bad. So if you look at this one, for example, it's extremely small. We have a front runner, which is basically just this logic here. It checks if QQQ is oversold, it checks if SPY is oversold, and then it goes into this rotation of bonds and checks which one of those has the lowest RSI and picks that to buy. Basically, checking which one has the most dip, right? Potential dip, that is. Now, obviously, RSI is a lagging indicator, but this does very well. So I'm hoping to see that this performance is not very twitchy, because we're doing a 14-day check and it's not specific. These are given values. If I hop into something maybe like this, if I go into one of these here, let's see. Let me open this up wider. Okay, this is a bad example, but if I come into here, some of these checks are fine, but some of them are like 79%. If I scroll down a little bit, like there's using 20-day RSI checks. Some of them are like, the specific 2-day check with 0.25, 98% with the 2-day check. It's just not, some of them just feel too artificial, right? You're not having a reason to actually go into it and having that signal other than it performed well in the back test, which is pretty much the definition of overfitting. So that's why I'm trying to simplify these. I'm working on another one and doing a lot of analysis in the background to try to get this beefed up with the best bonds slash municipal funds that I can find. There's a few that in the community that are seemingly unknown that I haven't seen, so I'm trying to introduce people to those. But I'll let you guys know what's going on there. On the bright side of things, things have done really well on the Wi-Fi, or sorry, on the Webull portfolio. You can see here that we're at 528. So if I go back to that portfolio tracker, for the 7 day, we're up 74% in 7 days. The CAGR, obviously, for this selected time period is off the charts, insane, but we're doing really good. You can see it's seemingly ramping up, which is super nice. And since I've been tracking it, we're up 137%, which is super cool. We still have a lot of way to go. We're about down 58% on that, almost 59%. But I have good, I have high hopes because MSTR is starting to lose a little bit of hype. BTC is starting to go back in its cyclical form and trying to go, it's going down into a trough. It's not at its peak anymore. So I have high hopes that this is not going to be performing super well coming forward. So you can see in the last month is down 13%. MSTR, on the other hand, in the last month is down 30%. So it's insane. It is insane. But yeah, moving into the thing that kind of saved our butts this week, which is the M1 Finance portfolio. You can see that was up 1.5%. If I go to the invest here, go to week. Oh, and I also did find out what happened with the Souls fund that we have. There was a it's not called a split. I guess maybe basically Honeywell had split with one of its inner divisions that I think they previously had bought, which was that Solus group or whatever. And so that's why when they sold that as a different company, that's why that kind of happened. But anyways, if we go into here, healthcare up 8.14% in our portfolio, most coming from Eli Lilly there. And we go to semiconductors, the most gain coming from AMD. AVGO, 8K Broadcom is down almost 2% though. It's interesting. And last but not least, energy is most of that was from ExxonMobil. Going into the weaker side of things, consumer staples, the largest loss there was Amazon. We have next financials. Largest loss there was from Visa. Interestingly, Morgan Stanley is actually up, which is interesting. I think typically that could be a arbitrage trade kind of thing route for some people. But and last but not least, on which one is this? Utilities, we have Southern Company down 0.82%. And if we go into the activity for the week, I think we had a couple dividends here. So we had one from Deere Company, John Deere. We had Apple dividend. We had a AbbVie dividend. We had a Realty Income dividend. We had a Morgan Stanley dividend and a Costco dividend. So pretty cool on the dividends. That's probably close to, 15, 20 bucks, which is pretty cool. If we go into the holdings here, we can check out the unrealized gain. AMD still skyrocket high, and some of these other ones have moved a little bit, but overall still really clean. And on the opposite side of things, that Solus company is obviously down, but that's not such a small percentage of our portfolio anyways. That doesn't really matter. I might just sell that and have it rebalance. The AMT down 10% and Procter & Gamble down 7%. Really sucks, but that's nothing more than probably a sector rotation thing. So, in fact, I'm going to see if I can do this right now. Let's see here. It should be able to, I think, go here. Oh. Can I I don't know how to do it. Anyways, I'll look into this later, but overall, guys, I think it's a pretty decent week. Going into the next week, it's interesting. Obviously, there's a whole government shutdown thing going on. But overall, I'm pretty happy. I still obviously want to do a few more tests on the Composer stuff. what I'm trying to do, hopefully I can try to manage it, but I keep thinking, I'm touching these portfolios quite a bit, changing stuff a lot. Realistically, what I think I'm going to try to do is try to limit myself and say, okay, no more touching stuff um after the new year, and anything that I decide to keep, I'm going to be in that for at least something like 3 months. Obviously, it depends on other stats, but I'm trying to limit myself to that so that I don't, change stuff, because the more I change, the less, the less having these strategies be kind of buy and hold that there is. So, anyways, it's gonna be a short video this week, but that is it for me. And as always, I wish you guys a wealthy future.